think something that I still apply today is kind of like this bias towards hiring very talented people and over-indexing on talent and less focusing on experience, because the thesis is there that like young, hungry, driven people are like smart and capable enough to figure it out versus relying on the experience and then basically doing things that the way they were conventionally done. That it is something that I'm still applying today in many of my businesses, and I encourage founders specifically to bring on people like an entrepreneur in residence or founders associate to give them this like driven talent in their organization.
Hey everyone, welcome back to the Ignite podcast. Today we're thrilled to have Christian Schroeder on the mic. He is a German serial entrepreneur, angel investor, company builder, founder and CEO of 10x Value Partners and Utopia Capital, and hands-on partner to founders building impactful early stage companies. Thanks for coming on, Christian.
Yeah, thanks, Brian, for having me.
Well, I'd love to start with your origin story. What's your background?
Coming from a background of kind of an entrepreneurial family. So when I was growing up, we would always talk about like business and like the challenges of running entrepreneurial organization at the kitchen table, at the dinner table. Yeah, I mean, like that kind of gave me the mindset of like thinkers. It's kind of like looking at opportunities everywhere where you could find them. I studied business. I started my career as many people in like banking and private equity, so the boring industries, but pretty quickly kind of like went back to like my roots of entrepreneurship and had the opportunity to join an organization called Rocket Internet, which in the 2010s kind of like really drove venture building at an industrial scale globally. So we launched businesses like ride sharing, e-commerce, and food delivery in like 50, 100 countries, predominantly Latin America, Southeast Asia, South Asia, the Middle East, and Africa. I had the opportunity to be the pioneer for e-commerce in the very fringe markets, so like the frontier markets that usually you don't associate with like a holiday destination. So my colleagues were lucky to get kind of like Indonesia and the Philippines. I built e-commerce in Bangladesh and Pakistan, and well, we also had Sri Lanka. Sri Lanka was nice, kind of, but like what was interesting about this is that like we could really be the pioneers for the e-commerce in this region. Was like barely anything. It was like a green field, and we basically had to even teach people like what kind of like it means to order something online, that's even possible. So I did that for a couple of years. I was a bit tired, to be honest, Brian, to travel every week with a small carry-on from country to country to make sure that the operations were running. And I wanted to do something different. So I moved into the headquarters of Rocket Internet and joined the venture capital fund, Global Founders Capital, and then spent another 2 years or so looking at thousands of business opportunities, point of view of investing, but also from a point of view of like, is this an interesting model that we could bring to a new market with our venture studio? And I did that for a little longer. But like the last 8 years, I've been more focused on investing. So I've invested in around 40 companies in a private capacity as a private investor. And also through my venture studio, 10x Value Partners, created around 10 companies from scratch. And yeah, I mean, I'm very excited about solving problems that have a meaningful impact for society and the world. And that keeps me going, I guess.
Yeah. It's a fascinating background. I mean, Rocket Internet's infamous, right? You know, the thesis there was, hey, let's take Uber, which is taking off in San Francisco, and kind of go build it in Europe or Africa or Asia. What was your favorite experience at Rocket that you really learned the most from, that you kind of still apply today?
I think something that I still apply today is kind of like this bias towards hiring very talented people and over-indexing on talent and less focusing on experience, because the thesis is there that like young, hungry, driven people are like smart and capable enough to figure it out versus relying on the experience and then basically doing things that the way they were conventionally done. That is something that I'm still applying today in many of my businesses, and I encourage founders specifically to bring on people like an entrepreneur in residence or founders associate to give them this like driven talent in their organization. I think like something that I'm really looking back to kind of is like the experience of being parachuted into a company. It was like 10 people in Lahore in Pakistan. And like there were like some operations going on, but the processes that were really not scalable, and to very rapidly assess the situation and then like come up with a plan of how to make something scalable where there's a market demand, but like you need to also execute efficiently. So that's kind of like something as an experience. I'm very grateful for that because back then I was like 22 years old, just out of undergrad, and like getting this opportunity to basically take on huge responsibilities. It's a great great school.
Yeah, I hear this a lot, and it's almost like cliche, like hire A-level talent that'll attract other A-level talent. What kind of tips and tricks have you kind of learned along the way to kind of spot, because typically you have the resume, you have the LinkedIn profile, you're like, okay, the person's probably pretty smart. And then you meet them, right? And you're kind of asking them questions and having a conversation in an interview kind of format. Where are you kind of like leaning in those conversations versus leaning out? And you've done this a lot at Rocket Internet. You've done it as a VC, and now you're doing it at 10x, both as an investor and at like a venture studio. And so your whole job, like all your jobs, have kind of really are predicated on that ability to spot, find, and nurture talent. Where are you kind of like leaning in with all those hats, and where do you kind of lean out?
Yeah, I think like there's a couple of things to look at. I think great people, they're always very good at being extremely concise in their answering. So like people who don't really know what they're talking about, they give you a long answer. But I think there's this saying that giving a short answer, it takes more effort. I think Einstein said this, or like some like very
Mark
famous
Twain
scientist.
said, if I would have written you a short letter, but I didn't have the time, kind of thing.
Exactly. Yes, that's what I mean. Thank you, Brian. And I think like this is something really when in the interview where you can pay attention to, or when you meet someone, are they able to give concise answers? Secondly, are they able to back up what they are saying with numbers? So like there are people who say like I grew revenue, and then there are people saying I grew revenue by pulling lever A and B, and this contributed 35% in terms of like revenue expansion. And then we added a new region, which added another 20%. So like people who are like very data driven and numbers oriented, usually they excel in kind of like scaling business. It's not like the 0 to 1 type of person, but kind of like when hiring at Rocket, we looked more at like scaling something which is already proven that had product market fit, because we took a business model that was already working. So we really like over index sort of on being on the data drivenness of people. And I think like another factor where I said like I like people who give concise answers, I would say like if there is no end to what you can talk about with people, because they have so many interesting stories to tell, so many different experiences that are relevant to the role you're hiring for, I would say that's also green flag. Usually if an interview is over after 10, 15 minutes because you don't have anything to talk about anymore, you just keep it going another 5, 10 minutes out of politeness, that's like not a good sign.
Yeah. These are all things that like, I've hired probably 100 people in my career, 100 plus. I'm not even sure how many at this point. And I'm actually going through the interview process right now, hiring a portfolio manager for Team Ignite. All these lessons, I know all these things that you're saying intuitively, but it's great to hear them like explicitly in a way. And sit here and talk about it, because these are all the same things I'm kind of like doing right now as I interview for a portfolio manager, because we have 300 portfolio companies. It's just like so much to manage. And I got as far as I could go with like AI and automation and a contractor, but now I need to actually hire like a person. And so I'm going through the interview process right now. So it's really, I'm almost like selfishly asking you how to hire the best people. But yeah, these are things intuitively that are great to hear, right? That you kind of get a sense. You kind of get a sense for somebody.
Yeah, makes total sense. Look, Brian, that's why I like to read books, because it helps you realize lessons that you've already subconsciously learned, but that you can kind of like reiterate on through the reading of the book, right? It's a great lesson.
Yeah, I love that. So you've been an operator, you've been a VC, and now you're running a venture studio. Tell us about your thesis. Like, what are you up to these days? You're building out 10x Value Partners. Is it just a venture studio? Are you also investing? Are you doing both? Tell us about what you're up to now.
Yeah, so I mean, like, it is not like really like clear cut. So I mean, like, you can say like I'm doing my investing privately, or I do through 10x value partners, but in essence, it's just like my own capital. I had a few exits. I was fortunate enough, and I'm running the venture studios like that. So we do both investments and also venture building. On the venture building, we're taking very concentrated bets. So we're doing a one or at most two companies a year. And what we're looking for here is like large markets. Like it's also very founder driven. So we had around like 10,000 applications for founders over the years. And something that we learned from Rocket is that we really want to be very like focused on a founder product market fit, and not just on a product market fit, because we had like some issues in the past with Rocket where basically the founders were not really passionate about what they were doing. We have like this kind of like repository of ideas with like 10, 15, 20 things that we really like, and where we're just waiting for the right person to come to us to work on something. So right now I'm very passionate about longevity, alternative health. I think that is like an industry waiting to be disrupted.
Well, yeah, I mean, if you want to, let's talk on longevity for a sec, which is a topic near and dear to my heart as well. I think I read some articles that you wrote about longevity. Was it you that did the telomeres lengthening? Was that you?
Yes, yeah, it's right, Brian. So that was
Yeah,
actually kind of my full-time job in 2013, 14 almost.
yeah.
No, I mean, like, I got into like this biohacking kind of like step by step. So in 2000 or like 16, 17, I worked like super hard, 100-hour work weeks, eating pizza every day. I gained a lot of weight, no surprise there. And I started like saying, okay, I really need to like kind of like look at my health. And first I just started going to the gym. But then if you have this entrepreneurial mind, you start thinking about how can I do this more effectively? How can I make progress faster? So you start looking at your hormone levels and like optimizing your sleep and so on and so on and so on. And yeah, I mean, like over the years, it got more and more sophisticated. And then in 2022, 23, I did like a test to see like the length of my telomeres. So for the viewer, telomeres is kind of like a part of the DNA, the genome string, which basically helps the cell to keep its integrity and perform its functions as cells divide. So with every cell division, the telomere would shorten. And after like several shortenings, it's called the Hayflick limit. Basically, the cell would lose its ability to continue replicating.
Yeah, you start getting mutations in the DNA replication as the cells divide. It's kind of like aging, basically, right? It's why
It
you
is
get
like one of
wrinkles
the
and
causes of
yeah,
aging.
right.
And people thought like 10, 15 years ago that's the main cause of aging. It's not really what the science tells us today, but it's still like a driver of aging. So telomere length is like something you would want to be concerned about. Fortunately, like Brian, I found out that my telomeres were extremely short. So I was in the 1st percentile for my age group. So it means like out of 100 people, 99 have longer telomeres. And if you would benchmark it, I would have had the telomere length on average of a 70-year-old at like 30 years of age. So I was like really concerned. And I started consuming all sorts of like literature on telomeres, what causes telomere shortening. I mean, probably like 50% of your listeners, Brian, have short telomeres because stress causes telomere shortening. So all startups CEOs are likely affected.
Well, yeah, I mean, if you're working 100-hour weeks, you're eating junk food, you're overweight, and you're stressed out, all of these are probably contributing to shortening them, right?
Yes. And I mean, like usually, I mean, what I was surprised about is like the severity of things. I think it can also be related to long COVID. So there is like some studies that suggest that like COVID can shorten your telomeres. But like, I think like there is also like, yeah, I mean, like other aspects here that maybe I'm not aware of. So, but because like if you look at, for example, studies that show that severe alcoholics, they lose like 3, 4 years of telomere aging. So to lose like 30 plus years, it's really surprising. But
Yeah.
anyways, so I dug really into the literature, learned also how we can increase the telomere length through like, for example, the enzyme activation of telomerase through other things like the clearance of senescent cells. And yeah,
So
I mean,
basically,
like,
like autophagy, like fasting, intermittent fasting, things like that.
yeah. And taking senolytics like fisetin, spermidine, resveratrol in high dosages
Yeah.
that help to clear out the senescent cells, but then also to stimulate like telomeric lengthening with like some supplements that you can take, as well as also the what was it, the red light laser therapy. I think that helped. I didn't do any hyperbaric oxygen chamber, which treatments that can also facilitate telomere lengthening. But like this is kind of like the cocktail of things you can throw at it. I'm quite lucky now that my telomeres are super healthy. I'm now in the 99th percentile for my age group. So it is really like a 60% length increase in the telomeres, which is, it's very
That's really interesting because
significant.
I always assumed, or maybe I thought an error, that the telomeres were just irreversible. Like once you lost them, they were lost forever. But it sounds like you can actually do certain things to lengthen them.
Yeah. There are also some peptides, such as I think epiphallalone. I don't know how to
I've been hearing
pronounce
about
this one.
157 peptide. Have you heard of this one?
BP157, it's more
Yeah.
like for like accelerated healing and joint
Yeah.
health. So if you have like an injury from sports and you want to look into like, oh, there's no medical advice here, but it could
Yeah, no medical
potentially,
advice here. We're just chatting. Do your own research.
yes, it could potentially be used for like accelerated wound healing. But then there are also like so-called bioregulators where we have some studies to lengthen telomeres. So there's like a lot of things you can throw at the problem, really. I'm in the position now where I don't need to do that anymore. But I think it was an exciting journey. And I would like to really partner with entrepreneurs, either from an investing point of view, but also from a venture building point of view, who are doing something in the longevity, health, biohacking space. I think like if you look at US GDP and what it is spent for, it's like healthcare is way too much and there's very little, if no efficiency gains. And it's just a system that is out of control.
I've
And
been thinking about
we
this
need
a
to do
lot.
something.
GDP is a really poor measure of economic viability because it's like you cure cancer and it would lower GDP, right? Or like if you solve aging, it would lower GDP in the short term anyway. I think in the long term, it'd probably raise it.
Yeah, if you have more people because you solve aging, so your population would like grow exponentially, kind of.
Yeah, and so like you think about like longevity, escape velocity. Ray Kurzweil's been pretty consistent that we'll reach that around 2032, is the early 2030s, call it. And if you think about that, like if we solve aging in the short run, it's going to lower healthcare costs, right? So GDP will actually shrink. But in the long term, it should increase GDP because people will create more value over a longer period of time. That's kind of an interesting measure.
Yeah. Look, I think like if you would, I mean, I think GDP is like not a great measure for like economic prosperity. So like, I mean, like the most extreme version of this, if you would nuke all the major cities in the US, it would grow GDP kind of because you would need to rebuild everything. But I mean, of course, you evaporate the capital stock quite literally. So like basically you should more think about like in terms of like capital stock, what's the wealth that the nation has accumulated, and kind of like what is the prosperity that they can derive from that capital stock, versus like looking at expenditure. And if you look at kind of what's happening in the world, a lot of the GDP growth, especially in Europe, in Germany, and other countries, it comes from public sector spending. And that is just like money that's just taken out of the pocket of the taxpayers. And we know, or at least it's my thesis, is that the private sector is just a more efficient allocator of capital, putting it towards usages which drive more economic growth. So I think this is kind of like really like a flawed way of looking at economic prosperity just in terms of GDP.
Yeah. So you're investing in growing companies in this space now, in the longevity space?
Yeah, I haven't really found the right investment yet. I'm quite excited about doing something potentially with regards to more like from a. So the problem I have with longevity is really like, I think longevity for pets is a larger market than longevity for humans, because like the feedback loop is just much shorter. I think a lot
Right.
of
Yeah.
people.
Your dog only lives 10 or 15, maybe 20 years. And so and you're probably more willing. I don't know what the laws are here in the States on this, but you could probably be a little bit more bleeding edge on longevity meds for your dogs than you can for humans. Are there FDA trials for pets? I'm not even sure.
I think like it varies country by country, but like at least in the UK, it's also the case that you can prescribe like approved drugs off label. So I took like a topical rapamycin off label to potentially cure my baldness. Didn't work. But like I'm now like after that doing the telomeres, I'm throwing stuff at my baldness. And yeah, I think like for the pets, definitely should be able to prescribe anything off label as long as you give like appropriate warnings that it might harm the dog or the cat. So you can do much more with that. Also, yeah, I mean,
Yeah, I think there's like I don't know how many dogs there are in the States, like how many dog pets there are, but it's tens of millions at least, right? And you think about like, we have a couple dogs, right? Little Maltese Shih Tzus, Malshis. And I think about how much my wife would probably pay to keep them alive, like if they're at the end of life, and how much people do pay. I've heard stories of people spending 10 grand, 15 grand on a surgery to extend their dog's life by even a year, which is crazy, because you can just go get another dog, but people get really attached to their pets. So I think your thesis is absolutely spot on, which is people are going to spend thousands, if not tens of thousands of dollars to keep their pets young. Have you looked into Yamanaka factors and kind of what they're doing out of some of the labs in San Diego and definitely the one out of Harvard with Dr. David Sinclair?
Yeah, I mean, I'm in general familiar with the Yamanaka factors, and I also heard about. I met an entrepreneur a couple of years ago who was looking to kind of like reprogram cells within the body like in vivo. I mean, theoretically in vivo, using the Yamanaka factors to drive younging. I believe that also there are some herbal supplements that like kind of can influence the same pathways the Yamanaka factors use. I think one of those was curcumin, but please don't quote me on this. It's just like based off memory. So I think like that is definitely interesting. I think like the risk with the Yamanaka factors, or the main problem they had was like the basically you need to kind of like do a partial reversion of the age to not go back to like the fetus embryo status, because then and you basically like lose everything. So I think that's the challenge they wanted to solve, is to use like the mechanism of the Yamanaka factors to really work a partial age reversal. Do you know like what is the San Diego lab doing, Brian? Are they working on that?
I forget his name, but Yamanaka factors is named after the doctor in Japan that discovered them, and he discovered them 20 years ago, I think. I think the paper was like 2007 or 8, something like that. And then there's another lab in San Diego at UC San Diego that's basically taken the Yamanaka factors and applied them to various age-related maladies to reverse aging in lots of different organs and tissues. I know Dr. David Sinclair is running a phase 3 trial right now to regenerate eyesight. So literally the kind of the neurons in your eyes, which is really cool. And so he's kind of starting with this one organ, right? With, hey, the eyesight, which everybody can relate to. Hey, if you're blind, or if always been blind or became blind, let's try to regenerate your eyes, your ability to see. And that's a really great use case of, like regenerating cells using some of these methods. Pretty exciting stuff. Yeah. We're like living through a period of time in human history in the next 5, 10, 15 years where we're literally can regenerate organs, tissues, teeth even, right? Regrow teeth. And yeah, what a great time to be alive. So
I heard recently actually about like a company working on doing growing humans, so growing clones without a brain. So basically you can do a copy of yourself without consciousness. So you can basically really get a parts repository for like all the organs and systems in your body that could break without any ethical, let's say like boundary breaking, I would say, because it's really like you're not doing anything like creating a conscious human being and then harvesting it for organs. But it's kind of like more like a meat slab, like something that we would grow in lab, really. So I found that quite interesting. I think that's something that could come into the market in like 10, 15 years and I think there's so many people waiting for kidneys, liver transplants that could really like make a difference for them.
Yeah, that'd be wild if I had basically a meat Brian Bell sitting in a a morgue somewhere, refrigerated, waiting for organs, or just sitting in a lab like, on life support, like with a liver and kidneys and things I might need in the future. Then there's all kinds of ethical things there, right? Like, is that a human being or not? Does it have a consciousness, or did we suppress the consciousness? It brings up all kinds of like philosophical, ethical of things. But I think, where there's a demand, people will find a way eventually to do stuff like that.
But I mean, like the point that I wanted to make earlier about the pets really goes back to like you need to see that there is like a viable business that can drive like venture scale outcomes. So I see like longevity clinics popping up right and left, and I think it's gonna be like a market that is viable as a small business, or like maybe even as a multi-100 million business. But can you build the next Palantir or Uber in with a longevity clinic? I don't think so. So what I'm very excited about, and I'm working on a thesis right now, is to build a business that gives people performance benefits in terms of like cognitive power, sleep, recovery, workout performance within like 2 to 4 weeks of taking the product, but then also drives longevity benefits over the long term. Because I think people really need to see like the instant feedback loop to adopt something.
Yeah, awesome. So tell us about 10x Value Partners. Like, what's the original thesis and how has it evolved since you launched?
Yeah, I think like the original thesis, and that was like 2018, was to look a lot into like D2C, which was then really like a very hot industry in when the Aways and Warby Parkers and the other like like big D2C companies, they exploded. So we did something like hair care and also like supplements back then. Then I think like I jumped into like different topics. I think in the 2000s, when capital was like quite available, especially on the debt side of things. We did things in buy now, pay later for renewable energies finance. We also did 2 roll-ups in video gaming and IT services. And then like in like 2-3 years ago, we focused a lot on like sustainability and impact technology. So companies that can have like a very positive impact on the world with the green wave. And yeah, I mean, as I mentioned, now we are more looking into like longevity. Also, we're looking into AI. So kind of like basically we are applying this rocket internet toolkit. I call it like a Swiss Army knife of like company building, how to hire the right people, how to build like a marketing system, how to build like operations, how to build like AI reporting. So like everything you need how to build a company, we apply it to like something where you just have like basically a downhill battle because it meets the zeitgeist. Maybe ideally we want to be like 1 year ahead of the zeitgeist. So Brian, maybe what do you think is going to be the next big thing?
Yeah, I'm not a thesis driven investor. I sort of I have a Zen mind, beginner's mind to every founder I talk to, right? Because usually they're the experts, right? I'm not the expert. I'm there to learn and understand what their unique vision and take is on the world.
Yeah.
I have opinions, right? Of like, but like if I knew what the next big thing would be, I would probably invest differently. But so far, so good. I mean, my funds have done very well, and I've invested in lots of great things. So it's part of like what's intoxicating about being a VC is just meeting really incredible people building cutting edge things. Yeah, if I knew what the next big thing would be, maybe I'd return all the capital to my LPs and go build it myself. Like
that's a good answer.
Like OpenClaw's a good example of that, right? He he just Vibe-co's it in a weekend, and a few months later gets acquired for whatever it is, billions of dollars. And that's just a guy who's a builder who decided like, hey, this needs to exist in the world and I need to see it built. I've learned that like I'm not that kind of person. I'm much more curious. I'm like much more a mile wide about things than I'm a mile deep. So I tend to skirt the edge of chaos of like what's possible. There's 30,000 companies that get pre-Series A funding every year. It's impossible to like be an expert in all those things.
No, absolutely. And I mean, like when I do investments, I mean, it's very much more like founder driven, of course. And like, because basically what I've learned from my investing is like, you need to back founders that are like really hungry and who want to build something big and who are like very passionate about the problem they are solving. I mean, like I personally, I would say I put like a lot more emphasis versus other investors on the unit economics and profitability. Out of my 40 or so investments, I think like over 50% are still alive. I think 20%, 30% are profitable. So I think that kind of like has helped a lot with with investing in something sustainable and growing the capital quite well. But I think in general, as a venture investor, you need to be agnostic. And I mean, a lot of the big returns, they come from the markets that are not hot, right? I mean, like, when Palantir was founded, like B2G, it was like basically like persona non grata. Nobody touched B2G and defense. And if you look at many of the great companies like SpaceX, like from a hardware perspective, it's like you don't want to be like a pioneer, so to say, but kind of like you also don't want to be. I mean, there's many examples of last movers, like Facebook was like the last social network. But I think if you're in an industry where you are the only company, you are able to absorb all the best talent in this industry, or the best like rocket scientists want to work for you. So it has a lot of advantages to do something that is unsexy. And that's, I think, where you can generate a lot of alpha as investor versus like funding AI startups at 50, 100 million caps at pre-seed.
Yeah. Yeah, I think that's really good insight. Yeah, founders are the most important. I've had multiple VCs on the podcast now, and they'll say, "Hey, it's founders, founders, or people." Then like good idea, good timing, good market, big market, things like that. But yeah, I think it kind of starts and ends with the founders, right? That's what makes the job really fun. Is you just meet really amazing founders, and you meet a bunch that you don't want to back as well. But like once a week, every few days, you just kind of meet one that's like, wow, this is an incredible person, and I definitely want to invest with them. Yeah, let's talk about your investment approach and perspective. So like if you're running a venture studio, you probably have lots of like ideas that you're kind of incubating. Tell us about that process.
I mean, like, honestly, like on the incubation side, we're like really focused. I think like a big mistake that a lot of the venture studios make is that they become more like an accelerator. So I think Y Combinator, they're amazing and they back 500 companies or even more a year, and that works really well. But like, I think the most successful venture studio in the world, it's like, I think, Sutter Hill Ventures. I would say they're the most successful. They are behind Snowflake and some other very successful companies. And I think like they do one concentrated bet every 1 or 2 years. So kind of like, this is kind of what inspired me as well to do like 1 or 2 companies. We have done around like 8 businesses in 8 years. 50% raised more than 10 million in follow-on funding. 2 others are still in the races. So that's kind of like how I want to do it. And now I'm very excited about longevity and like also like B2B process automation with AI. So like going into a vertical such as like we're looking right now at insurance claims. I think that is something where you can do a lot of AI automation. So we're thinking if that could be something. And so we're very, very concentrated and thesis driven. We also try to kind of like build an unfair advantage if we want to launch something. So because we want to win, and then just like building a business and then starting the sales, it's really not that appealing. You want to build in an industry where you can immediately day one unlock 2-3 customers that give you $1 million in ARR, or you want to have like a distribution secured for like the supplement business that we are looking at. So this is like really how we go about it. Like we want to have a good industry, unfair advantage, and a strong founder.
All right. So I wanted to talk about kind of your broader views about macro trends, particularly around AI. You've kind of seen a couple cycles now as an operator and an investor. What are you seeing right now on the ground, and kind of what are you looking forward to in the next few years?
So I think there's a couple of things that I'm seeing. First, I'm seeing kind of like a lot of AI companies growing faster than ever. So like, I mean, everyone was like like excited about Slack going to like 100 million in ARR within like 3 or 4 years. I don't know what it was. I mean, today everybody laughs about like 3-4 years. I mean, there's companies going to 100 million ARR in a year. So like, I think AI accelerates everything and like distribution. I mean, the product becomes your distribution almost. So that's like something that I'm seeing. I think like then there is like a divided field on like where people believe the AI value capture is going to be. I mean, like taking the language models aside, talking about the application layer here, it's like there's people who think like you're going to make the money with like selling the software. And then there is like our folks like the General Catalyst and Khosla Ventures and 8VC, they like launched funds that are focused on like being the operator, so the operating layer that implements the software into the businesses and owns the business. And through the acquisition of the business through a roll-up strategy, kind of like captures the value of the AI by the margin expansion. So like personally, I think like both are fine. I'm a little bit more excited about the roll-up angle just because we have like got a lot of experience with roll-ups. Out of our 5 biggest successes in the venture portfolio, 2 of those are roll-ups that have done tremendously well, reaching like 8 figures in EBITDA each. So I'm very like familiar with this category, and I think like the thesis that AI would expand margins, it makes a lot of sense. But if you look at companies like Fixer and some others, Lovable, of course, and the other vibe coders, I mean, they are like a B2B distribution software play, and they have been growing like wheat. So I think both is quite viable. And yeah, I mean, like that's how my kind of like macro view is on the AI kind of like landscape.
Yeah, and it's making, and what I would add to that is it's making previously unviable businesses viable, right? It's turning kind of like agency, professional services kind of businesses into kind of more like SaaS outcome-based businesses where, you can use AI to, deliver labor as a service, right? And so capital is kind of eating labor and replacing labor, at least accelerating labor and making labor more profitable than it was in the past, right? Because you used to run like an agency or a professional service company, a doctor's office, even dermatology office is like one of our AI companies. And now with AI, you can deliver that service with much higher margins, much more consistently, much faster. So it's really exciting.
A little bit like Ryan, the contrarian point to this, and I spoke to this with like one of the managing partners of like of the most successful private equity funds in the world, and basically like I mean like he is in his 60s, so he's seen all the cycles. So like I mean the counter thesis to this is like, will customers' expectations go up, right? If like now like the pioneers in the AI industry, they automate the creative process for logo design and they do the logo in 5 minutes versus 3 hours. Will the customers in the future expect that you give them 50 logo options because it just takes 5 minutes to do so? So is the margin gain a temporary or is it permanent? I think that's a very valid counterpoint that customers are just expecting larger, better quality, more output, and as a result of that, like kind of like the output, it reverts back to the compensation for the output reverts back to the mean of what the productivity is of the economy on average.
Yeah, totally. Well, I'd like to wrap up with some kind of rapid fire short questions, if you don't mind.
Mm-hmm.
So, through all this, what's a principle you've learned that through building and investing that you think every founder should internalize?
I mean, like I would say, like the principle of like compounding and continuous progress. So, like my whole mantra is getting 1% better every day on some metric, and that leads to a 10x improvement over the whole year by compounding 1.01 to the power of 230. And I think like this is like really what has propelled my success and what I've seen in other companies, that like you never give up. You always start a new initiative, and that way, I mean, like the compounding takes care of everything over the long run.
Yeah, consistent improvement. Yeah, I love that. If you could go back to your first fundraising round, or maybe one of your first operating experiences, what would you tell your younger self?
Look, I think like when I was working in the first ventures, I think like it is like preserve runway. You always have like a lot of runway. Have like try to maintain 2 years of runway because it gives you like just much more optionality and also like the ability to be more bold in your fundraising.
Yeah, I think it's like rule number one for startups is don't run out of money, right? I see so many founders just burning it all the way down to zero and trying to raise. It's just then you start having to contort and take bad terms and things like that. And you're not really controlling your own destiny. I tell my founders, if you raise a couple mil at the end of the 2 million burn, you're going to turn a burn for 18 to 24 months. You should actually be basically cash flow even at the end of that 2 years and be raising from a position of strength.
Couldn't agree more with that.
What's a myth about venture capital or angel investing you wish more founders would stop believing?
Myth. I think a myth, like a lot of founders believe, is that the feedback you get from the VCs is like the real reason why like you have been passed on. I mean, like usually, like you don't hear the real reason. There's something that might be also outside of your control. The fund doesn't have money to invest, and they just like string you along, or like that they didn't like you as a team, as hard as it sounds, but nobody gives you this feedback. So like, don't take the feedback from the VCs and adjust your business, how you're running it, because it might not even be true.
That's really good advice. I mean, because every VC is different, right? You've met one VC, you've met one VC. We all have different preferences and different needs in our portfolios, and there's different ideas about what'll be successful. And basically, a yellow flag if the founder's asking me what to do. It's kind of like, well, you should be telling me what you want to do, and not the other way around. I don't live and breathe your business 80 hours a week, you know?
Absolutely.
How do you manage the personal tension between being a founder, investor, and a mentor all at the same time?
Look, I think like the tool that really helped me is time boxing. So kind of like setting aside different days and time periods for different things in life. I try to do all my meetings on Tuesdays and Thursdays so that I get Mondays and Wednesdays for like deep focused work. On Fridays, it's like a kind of buffer day for whatever needs to be done with regards to like being a mentor. So I like to be available like on WhatsApp and like, but I'm not super hands-on, you know. And I mean, I try to touch base with every founder like once, twice a year, because like usually when you invest, you want to back people who are like very likely to succeed anyways on their own, and then they just need like this introduction here and there, or like this kind of like little piece of advice. So you try to move the needle like 5%, but if you need to move the needle 50%, you invest in the wrong company.
Speaking of, what's a capability or habit you think investors need to develop more for this upcoming market cycle?
Look, I think actually, I believe a lot of like VCs, they are structurally not trained and capable to access risk. A lot of VC investors, they just think about upside, how big can this become, but like not like weighting this by probability. And I think like, yeah, I mean, like, I think like this is going to be more required in the future with like valuations getting really out of control, because then kind of like you need to assess more the probability of the outcome. And also in these PE models, which are like more like roll-ups, it's really like more like a sensitivity versus a size of outcome game.
Yeah. What's a startup or founder you were most impressed by recently, and why?
I mean, like my all-time favorite founders, I think Nick from Revolut. I think like just the aggressiveness, the scale of his thinking, the way he's running the company like a machine. I think he might have been inspired by Ray Dalio, actually. Publishes like book about the machine and how you run the company. I think like this is like probably the best founder in the world.
Yeah.
Make this very strong statement.
And if you had to summarize your investing philosophy in one sentence for founders to remember, what would it be?
So I would say like, I think if you want to have like an investor that, if you want to have an investor that has been a founder before, that has scaled companies to 8 figures in ARR and who can give you actual advice, then you want to partner with us.
Yeah, love that. Well, where can folks find you online, Christian?
Well, I mean, we have our websites, 10xvaluepartners.com, utopiacapital.com, my LinkedIn, and also my Substack, my blog. I try to put out a blog every 2 months on like how to build companies, like mental models for success, philosophy, economics. It's quite broad.
Yeah, love it. Well, thanks for coming on. Really enjoyed the conversation.
No, thank you, Brian, for having me. And it was very nice talking to you today.